Time now for charting futures. And Abigail Doolittle, you're joined today by a trader who said buy the British pound futures back when it was closer to 120 a few months ago.
Yes, absolutely, Romaine. We have quite the trading maestro with us. That is Tom Thornton of Hedge Telemetry, and we'll be joining him in a moment. But first, let's take a look at the pound and what it's done since that time period, because Tom last time joined us in August when the pound was closer to 120. And take a look at the quarter to date right now. Really pretty incredible. This actually goes back before the quarter, but the big boost here mainly coming this quarter, up 6.5%. Right now on pace for its best quarterly gain going back to 2009. This, of course, ahead of the general election on Thursday. Let's put this into the context of a truly long-term chart. Goes back to 1971. We see the highs there above 250, and then down, closer to 105 in 1985. Huge range of uncertainty, huge whipsaws for the pound against the dollar. The recent high, or the last high, I should say, above 2. And then here are those lows back during the true Brexit, and then this past summer closer to 120, even a little bit below. Right now, it looks like this chart suggests we're going to see the pound over the long term go back toward 140, 150, maybe even 160. But timing, of course, is everything. So to talk more about that timing and whether or not you even agree with that, Tom Thornton of Hedge Telemetry, thank you for joining us for charting futures. And what do you think of that long-term chart? Do you think that the pound could make its way back up as it's done through the decades?
We have a lot of resistance at that 140 level, so I think it's going to take a lot of work to get through there. It's possible, but I think you have a short-term, maybe stalling out pattern that's happening right now.
Okay, so let's put that into the chart that you presented here back in August. And last time we had a MACD, but now we have an RSI. So back in August at those lows, you said to buy it for 127. Well, we're well past that.
Yeah, we did okay here. The RSI was under 30. The MACD was also oversold. Now we're getting to a bit where it's a little overbought. And 127 was our initial level. And now it's had this nice 6% move, which I think is pricing in Boris Johnson's win with the Conservatives. And I think it's a little overdone.
Okay, so lots of different levels here. Talk to us about those in the context of trading this through options, because if you're not going to make a clear directional bet right now, great way to do it would be options on British pound futures.
Right. I think that what I like is to sell a strangle.
Okay.
And essentially, we're going to sell the 130 put and then sell the 134 call.
Okay.
Now, you collect $1.50 in premium. The risk levels are 128 and 135.50. Now, I'd like to sell the pound at 135.50, and I'd like to buy it at 128. Those are good levels, I think, going forward, if we have some pullback after the vote.
Well, it should be interesting to see what comes after Thursday, and this is a great way to play possibilities on all sides, or both sides, I should say.
Right.
Tom Thornton of Hedge Telemetry, thank you for joining us for Charting Futures.